Hi, I'm Craig Harris, and this is what happened this week in our trade room using the natural flow system. Let's take a look.
Okay, so let's take a look at the week of November 12 through 16 and show you a few of the trades that we took and where they set up at. First of all, let's take a look at the euro dollar. This is Friday, the 16th, and I'm actually going to show you something that I teach but don't really highlight in this review, but I'm going to show it to you because it actually happened. Here, right around the London Open, I took a long right here based on a reversal candle pattern and a break, which is in the free video, so you can take a look at it. And I had a stop loss right down here. It was, I don't know, 20 pip stop loss or 18, 19, 20 pips, something like that, stop loss. And the market reversed on me within just a couple of candles. And I employed what I call a stop and reverse. And I actually traded the other direction with some increased leverage. And I got in basically where I had a pending order. And I got in basically where I was stopped out of my original trade. It moved down 10, 11, 12, I don't know what it was, 16 or 17 pips, and I took 11 of them at increased leverage. So just real quick math, I took a 20 pip loss on the first entry long. The market reversed, and I went ahead and reversed with it. I increased the amount of leverage to 4 times the amount. So 11 pips times 4 times what I normally would trade gave me the equivalent of 44 pips. A 20 pip loss, a 44 pip gain. That's a 24 pip overall gain on Friday that I had. I don't typically trade after the London Open on Fridays. That's my day not to trade. I don't like what the market does on Fridays after the first couple of hours. So that was that trade. Okay, so let's look at Thursday. On Thursday, the pound dollar set up, and I took a couple of trades there. I really like to trade. In fact, I don't trade until London opens typically. So the aqua line here is the London Open, and that's when I trade. I trade the London Open for 3 or 4 hours, and then I trade again after London closes for 3 or 4 hours. And I took a trade right here after London Open. Typically, that's when you start to see the Tokyo channel get broken and the market starts to make some moves. I actually took this short right here, and it ran down, and I took about 15 pips. I think it ran down 20 something pips or something like that. 20 something pips, and it monkeyed around in here for a little while, so I closed out at 15 pips on that. My bias was actually long on the day, and so I didn't hold the short trade for very long. I took 15. Right after that, we see this really large wick, which is a rejection of the low that was showing from the previous day, in fact. And so I went ahead and I took my long right here, a reversal candle pattern. It's one of the free things that I show you in the big number entry videos, so be sure and watch that video. I took the long right here, and it took a while for the market to, it gave me some profit right away, and then it came back, and I think I was down 15 or 16 pips or somewhere in that neighborhood, 18 pips, something like that, and then it eventually, ran up, and I took 25 pips on that trade, and then I was done. That was the pound. And let's see, I think I also took a trade on Thursday in the Australian dollar. Let me show you that because it's a different trade. Remember I said after London closes, which is right here, I like to come into the market, and I like to look for counter trend trades. After the market's run, typically it likes to return 23.6% or more, which is a move like this. Once the market makes its overall move, it likes to come back into the 236 area. And I actually took this trade right here off of this break right here. It was a reversal candle pattern off the bottom, and it moved up, and it kind of monkeyed around for a while in there, and after a while I just closed it with about 10 pips of profit. But I had a pretty decent day from the London Open, so I was satisfied with taking 10. Usually this trade is good for 10 to 15 pips at the end of the London session. Once New York closes and there's no more news during the New York session, typically you'll see a little bit of a pullback, a retrace. So I actually took that trade also. Okay, let's go to Wednesday, and we'll go back to the pound and scroll back a little bit here. And let's get into Wednesday. And you can see here from, just so that you're aware, from Wellington Open, which is the start of the new financial day, that's my goldenrod vertical line there, until Wellington Open. That's a complete day, and so we're on the 14th, which was Wednesday here. And again, I took 2 trades in the pound dollar. I took the long. Remember, I like around London Open. Once the market gets out of the Tokyo Channel area, I like looking for whatever that trade is. The trade setup was right here. We had a reversal candle. I took the break. It was on this candle right here, and it ran up whatever it did. I think I took 10 or 12 pips or something like that on that trade. 10 pips is actually what I took after it went up and it created that push, and then it came back, and then we had a reversal candle, and off of the reversal candle, the high was pretty close to the previous candle's high. So once it closed, I went ahead and just took my 10 pips on that trade. And I was actually looking for the market to pull back a little bit and down, and I took this short right here, reversal candle right here, and then the market dropped, substantially, and that was an easy 25 pip trade for me. And in fact, I took it set up so nicely that it set up on several pairs, and I think I took it on the Australian dollar also. Let's just check real quick. Yeah, on the Australian dollar, same thing. The 14th, same short setup. The market had a reversal candle pattern, and I went in and I got in here somewhere, and that was for me also a 25 pip trade. It came down into this area here, and when I had 25 pips, I clicked out. One of the things that I pay attention to is swings and how big the swings are. And by the time I had 25 pips, we were, looking at a 40-something pip swing. And the swings historically have been a little bit smaller in the Australian dollar. And in this year, we haven't really had the big 60 pip swing. So once I had about 40 pips into the swing, I called that good. And got out of that. Okay, so let's see here. Go back to the pound, and we'll scroll back another day here. And again, this is Tuesday. Same thing. Basically, I always look for around the London Open. What happens when the market wants to get outside of the Tokyo Channel, which was 26 pips on Tuesday there. And the reversal candle pattern set up, this gap time area. I'll explain that to those who take the course, but it's a heads up for you. And oftentimes, whatever it does, the market will go the opposite direction once it breaks out from that first hour of the London Open. It's kind of like a head fake thing. So anyway, I took a long here, and it ran up, and that was an easy 25 pips on that trade. Also, I don't want to make this video too long, so let's go ahead and scroll back one more day, get Monday in. Yeah, so the currency, it actually took a couple of hours for this to set up nicely, but the lower high that was set up, and it was a high that was almost equal to where the Tokyo Channel high had been set up, and on the reversal there, I traded that, and that also was an easy 25 pips or whatever it was. It was somewhere in there. Yeah, and I think I took 25 pips on that. Nice, easy, straightforward trade. On the Australian dollar, I think I traded it also. Yeah, right here at the 9:15 candle. Remember, coming out of the when London opens up, this is where I like to look for my first trade. And typically, whichever way it breaks the Tokyo Channel, usually it likes to move that way, 25 or 30 pips initially. And I think I took about 15 pips on this trade right here. I don't know what this did, 20-something pips. And I think I took 16 pips is what I took on that trade. Okay, so that's a quick recap, and I hope I wasn't too long there. But just to kind of give you an idea of the trade setups that we're looking for and how they happen really pretty much in all the currencies. Pretty easy to go out and grab some pips within the natural flow of the market, the natural up and down swings. Okay, thanks a lot. See you next time.
These were some examples of the trades we take every day in the trade room. Until the next time that I do a review, my best to you with a handshake.